Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Night video for September 4th, 2018. It's Labor Day. It's the Labor Day week, and we're talking retail. Retail names are breaking out. Some of them are making new all-time highs. Of course, some of them are not, but we'll focus tonight's video on some of those strong stocks getting stronger as we look at the broader sector. Now keep in mind, not all stocks in the sector are doing well. For example, L Brands and JCPenney continue downtrends, but we're not looking at those for the moment. We're taking a look at this higher high, higher low, and the recent bounce off the 20-day exponential average. This is, again, the XRT retail sector, and that's just a part of the XLY consumer discretionary broader sector. Now, key retail names, we just took some at random here, but focusing on strength. So random, yes, but we filtered out some of the candidates by strong stocks getting stronger and those specifically making new 52 or in some cases all-time highs, like Amazon. Amazon continues to break higher through our trendline pattern, through 2,000 per share. Now it tipped the scales at $1 trillion today in terms of market cap, but then eased off a little bit into the remainder of the session. Nonetheless, 2,000 per share is a simple round number, and of course today's high at 2050. We do not like to put on positions at all-time highs. If anything, a pullback or retracement strategy would be favored. But balance that against the risk of what happened to us in AMD, which is this strong stock getting stronger, not really pulling back, and getting even stronger. Amazon is a good case of that. We do like to find strength. It's in some of the retail names, but then we like to manage our risk by buying, getting some calls, or shorting a put vertical on these strong stocks getting stronger, pulling back to support levels such as rising trend lines, that's simpler, or rising moving averages. Home Depot broke out today, not quite the new 52-week high, but cleared above its 200 per share level. We still have this rising trend line. We do have a wall of resistance near 203, 204 per share, and that's beneath its 207 per share high. We're seeing Home Depot push its way to this 2018 pivot on a little bit of stronger volume today. So keep watching this name as it bounces up off the trend line, pushing back to the high. Now Target just made a new 52-week high, 89 per share, pushing up into 90. And that occurred on higher volume on the way up. Yes, that was earnings. But yes, it also broke out before that through our triangle trend line at the 80 per share level. And after a couple of pullbacks, spots to get long or buy some calls or do some spreads, Target pushes up toward our target at 90 per share. Still looking for a pullback or a risk management play into resistance, but this strong stock does get stronger, and that adds additional bullish fuel to the broader XRT and of course the retail sector in general. We've been playing and even trading Costco as it gets stronger, not really pulling back beyond a couple of sessions. Again, pullbacks to the 20 exponential are the ideal spot to get on new swing trade positions. But like AMD and others, Costco did not quite pull back all the way just recently. We've seen broader strength in the market, and that carries forth into names like Costco. And this breakout to new highs keeps this uptrend in motion. It's a creeper uptrend, it's a bounded uptrend, but still Costco trades even higher. Lowe's had this bullish gap outcome, breaking above its overhead resistance at the 100 per share level. As swing traders, that's what we like. We like to see markets pulling back, trading up toward, that's a spot to take your profits if you're a swing trader bull, and then on the subsequent breakout, either join that breakout aggressively, we can see it here, that again was earnings, and up toward the prior high. So Lowe's trades into the 110 per share level. Sometimes it's helpful just to go with round numbers as targets to play toward and take profits into them, but also potentially to play against on an aggressive fade into your resistance target. Otherwise, additional upside action beyond 110 gives us further candidates for bullish, buy, or pullback opportunities. Now, everything we've looked at has been relatively bullish, strong stock getting stronger, but I wanted to mix one in there that wasn't quite super bullish. It's CVS. It's forming resistance into 75 per share, which is our upper trend line, but be a little bit wary because this is a similar setup to Nvidia and AMD, and those stocks had one day of sell pressure and then broke strongly to the upside, not really pulling back at all. So CVS, if this key pivot level holds 75 per share, we might see a pullback to around 70. That's the midpoint. That's the little down sell swing target, but maybe even back to the lower trend line, which will come up to 66 per share. Now back to your strong stocks getting stronger. Tractor Supply has consistently come up in our intraday stock scans to buy pullbacks on the 5 or the 1 minute chart. It's also come up on our new 52-week high breakout scans. And this is why we use those scans. So Tractor Supply did break above 83 per share, 2018 high, and then over here, and continue going relentlessly to the upside. Short squeeze breakout and additional bullish action. There was a small pullback. That's the theme of the most recent week. Small pullback, a little bit smaller than expected, but then rebound and resiliency toward and above the prior high. Ross Stores kept this uptrend going. Not a great pullback, but again, it is a strong stock getting stronger toward the 100 per share round number target. Two more. Ulta. Ulta is a beauty supply retail name that held support at 231, price pivot, 200-day simple average, bullish volume, and then surged the last 2 days. That also was an earnings play. Finally, the little yoga stretch pants, Lululemon. Strong stock getting stronger, and this is a good example of why we like to find gaps and markets that go with the gaps on strong volume. That tends to favor additional breakout to the upside. If anything, we do not want to fight or fade or short sell a market that gaps up on extremely high volume. We still like to play pullbacks or retracements after these gaps occur. A couple of examples from earlier in 2018, a little flag to the moving average or the trend line. That's a call buy or otherwise bullish opportunity. Now this one still, Lulu gaps up. Yes, earnings like Ulta. But again, this is filtering into the broader retail sector and consumer discretionary. Uptrends continue. Not all stocks, but the ones that are getting stronger, we look for those the candidates to buy on pullbacks. Take care, always be safe. This is Corey Rosenblum with your September 4th, 2018 Theo Night Video.